Economic picture continued to worsen today. Weekly jobless claims at the worst we have seen in 7 years. Mass layoffs continue across a variety of sectors in our economy. The markets remain in free fall, although there was a late rally on Wall Street today. The Dow Jones Industrial Average off 33% for the year. NASDAQ and S&P 500 down around 40% each. The Senate Banking Committee held a hearing today with representatives from banks getting money from that $700 billion financial bailout package. Committee members wanted to know where the money's going. Not an unreasonable question. Bank executives say they are both lending the money and working with delinquent homeowners, and that the money is not going to pad executive paychecks. A general counsel at Goldman Sachs told the committee that compensation, quote, will be down very significantly this year across the firm, particularly at senior levels. We get it, unquote. But what does down very significantly mean on Wall Street? According to Bloomberg Financial News, Goldman Sachs has set aside $6.8 billion for year-end bonuses. Morgan Stanley, $6.4 billion. Now that figure's down from the record-setting $12.1 billion Goldman shelled out last year and the $10 billion that Morgan Stanley paid in bonuses. Granted, they cut their bonus numbers roughly in half, but that's still a lot of money. And both firms are taking taxpayer money from the bailout package. Goldman Sachs and Morgan Stanley each got $10 billion of your money. Here's the question. What does it mean when Goldman Sachs and Morgan Stanley are planning to pay $13.2 billion in year-end bonuses? John in Colorado writes it means the top management for both companies must have been born on the sun. Unbelievable in today's dire economic environment that any financial institution would pull such an in-your-face stunt. Liz in Maryland writes it means the company's executives have no souls, no consciences, no common decency, and an overwhelming amount of greed. Willow in Iowa, we need to pass some kind of regulation stating no bonuses can be given to companies in the bailout, and the top management payroll can only be a certain amount over other employees' compensation. We're essentially the owners now till they buy themselves back, so we should be able to set the terms. Sarah writes it means the bailout cash they received was given without precondition. The government gave them the money and actually trusted that the companies would use it to start lending again, when in fact they just kept it as running capital for things like bonuses. Greg in Kentucky means all systems are go for the continual looting of the U.S. Treasury, or what's left of it. As usual, the only people asked to sacrifice significantly are the ones who can least afford it. It also sends a mixed message to Main Street when Wall Street can take such an extravagant gesture in the face of the worst financial crisis since the Great Depression. And John writes from Massachusetts, what brain-dead big shot negotiated this mess? Treasury Secretary Hank Paulson came from Wall Street and knew full well his cohorts get monster bonuses. Curious he wasn't insightful enough to negotiate their elimination.